Welcome to All About Money on HKIBC. I'm Chloe Feng. There is encouraging news for China, with the latest economic data showing growth in industrial production, retail sales, and fixed asset investment, all beating market expectations. The world's second biggest economy has survived several unexpected headwinds. But let's not forget that a deepening property market woe and COVID lockdowns still weigh heavily on spending and confidence. So what's in store for China? Will the Communist Party Congress next month provide an opportunity for Beijing to adjust its COVID strategy? For answers, let's turn to Zhang Zhiwei, Chief Economist at Pinpoint Asset Management. Thank you, Mr. Zhang, for joining our program.
Thank you for having me.
And let me start by asking your thoughts on China's latest economic indicators. So what do you make of the newly released data in general?
Yeah, so I think the data is, the data release came out as, a bit above market expectation. But, put all those data points into the context of, the past couple of months. All the data points we got, actually, I would say the economy now probably stabilized, but at a relatively low level. And there are also, mixed signals that we have. On one hand, some of the data points like, today retail sales improving a bit, but we also have exports slowing down. PMI is still quite weak. So I would say at this stage, the economy still faces quite a lot of challenge, still at a pretty weak position. But the good news is it stopped getting worse, right? So that's the key message that I would take from today's data release.
Right. And first, let's talk about the industrial output. It seems that despite the power crunch and the unprecedented heat wave, the industrial production still performed well, rising 4.2% year on year. So what do you make of this growth?
Yeah, so I think part of the reason why the industrial production performed well is the lessons that we learned from last year. That the government now is more experienced dealing with power shortage. Remember, last year we also had a pretty severe power shortage. Part of that is because of the restrictions imposed because of the carbon neutrality goals that the government tried to achieve in the short term, right? So now I think the government is more experienced in dealing with this kind of situation. And also another part of the performance came from the fact that the government now, when they deal with COVID outbreaks, they are also more flexible, and they try not to hurt industrial activities. So for instance, what we have observed in Shenzhen, although there's a COVID outbreak, the government didn't stop all the industrial production. They didn't shut down all the factories. I think that helped to preserve some of these industrial production in August. That helped to boost the number.
Right. And also on retail sales, it grew 5.4% year on year, up from the 2.7% in the previous months. But now, the tourism industry has been hard hit following the pandemic and also the zero COVID policy. And during the Mid-Autumn Festival, the tourism revenue also fell sharply by 20%, while the domestic tourism trips taken during the three-day holiday also fell by 16%. What is your view on the outlook for the retails and consumer spending in the coming months? We know that there will be more holidays along the way, right? So do you think there will be a further recovery?
It's going to be tough. I think on the consumption side, particularly, actually the whole service sector still face pretty big challenge. The COVID outbreaks nowadays are more difficult to contain because of these new variants now more contagious. And the government also reiterated its view and still follow the zero COVID policy and very clearly, right? So a lot of these policies are implemented quite effectively at early stage, and that inevitably hurt the economic activities, particularly on consumption side. So I think for the rest of the year, tourism, retail sales, consumption probably still face some downside risk. Now, going into next year, this depends on how the government will think about the zero COVID policy, and there's some expectation, I think, in the market that going into next year, the policy may be revised somehow to help the consumption sector.
And also on the fixed asset investment, it rose 5.8%, up from the 5.7% from the previous months. But the property market remains in a slump. But China's, for example, central bank in August has already surprised markets by cutting the key interest rate. So what do you make of these measures in order to boost the property growth? Are they enough to spur the growth?
Yeah, the property sector is still in a very challenging situation. And we noticed, there are policy measures getting rolled out recently on the margin. I mean, particularly on the local government level, right? So there are some cities removing the local resident purchase requirement, the 限购, the policy, which I think is a big step, and that's in the right direction. And I think the central bank is obviously helping on the margin as well, cutting interest rate. But I think the key policy that could help the property sector is not about monetary policy, because cutting interest rate by 10, 20 basis point helps on the margin, but it's not going to change the whole picture. What really matters is still what's going to happen to on the ground, on the local government level, whether they remove some of these restrictions, and also whether those developers on the margin can get some help, and they, for instance, getting better access to credit. And going into the next 6 months, I think there will be more policy measures coming in the property sector, and situation probably will improve on the margin, but it could take some time as well.
And what about the unemployment rate? We know that China's unemployment rate has remained very high, and even this month, despite the slight drop, it still remains high. So how will the high unemployment rate affect the country's economy?
Yeah, I think that hurts the consumer confidence, and we know that unemployment is kind of a lagging indicator, I would say. So the economy slows, and then the firms they try to hang in there. They try not to lay off people, but if the economy stay weak for a long time, then they have to. So it's a kind of lagging indicators. It's very hard to improve the labor market condition very quickly. And particularly, I would say, in the service sector, right? So without a meaningful change of the zero COVID policy, it's hard to boost confidence in that sector.
And also, all of these areas that we mentioned above is also putting pressure on the fiscal side, right? And from the slashed revenues from the property sectors, and now with an increase in expenditure, all left China with a 5.3 trillion yuan deficit in the first 7 months of the year. So I'm thinking, how concerned are you when it comes to the fiscal pressure, especially for the local governments in some less developed areas, right?
Yeah, Chloe, I think you're right, particularly about these sort of inland provinces, some provinces that are hard hit by the COVID outbreaks. For instance, some cities may depend a lot on tourism, some heavily depend on, say, property sector, and then they are in a pretty challenging situation. And I think going into next year, the fiscal situation may actually get a bit tougher, because this year the central government actually provided a lot of financial assistance, but going into next year, we need the property sector to have a meaningful rebound so the land sales can improve and boost government revenue. So that's very important. And we also need the tourism or the service sector recovery to help the economy, because the challenge that we face this year on the fiscal side to some extent has been offset by central government helping the local governments. But next year, I'm not sure this transfer can really help as much as this year.
Right. And Zhiwei, under what kind of scenario do you think will be considered as a breaking point for Beijing to really, shift its, domestic policies, for example, on COVID strategies?
Yeah, that's really hard and to forecast. And I think also, one question, I guess the billion-dollar question for the market, everybody wondering. I think there are a few things that could help the government to make the decision. And one statistic that we're following is the vaccination rate, right, for the whole population. The other thing is the experience in other countries and regions. And I think Hong Kong experience would be very helpful as a reference for mainland to make the decision, when to make the transition. And international experience, such as, recently the United Nations organizing conference on the end of the pandemic, those kind of international reference would also be very helpful. But particular breaking point is hard to identify. Hopefully next year sometime, our expectation is sometime probably after the first quarter, maybe the government will try to make a move. But when they make that transition, it's probably going to be a long process as well.
Got it. Thank you very much for your thoughts, Zhiwei. That's Zhang Zhiwei, Chief Economist at Pinpoint Asset Management. We'll take a short break for now, and coming up next, we'll have more discussions on Asia's economic outlook. So do stay tuned.